So why are you here? Who am I? What are you going to get out of this? At the end of this episode, you will hopefully have an answer to many of those questions. Firstly, shout out to Danny Knowles, who couldn't make it as episode 1 for the Jake Woodhouse podcast. No problem. Rescheduled for Feb, which is awesome. But what I'm trying to build is a super sustainable content creation process. I love having conversations, real conversations with people that have done stuff and they figured stuff out, or they failed, or just, life, essentially. It's like, who are you? What brought you to this point? And therefore, it's not going to be stressful. So if someone can't make a recording, no problem. We'll do it another time. And something I've learned from previous podcasts is, actually, I like talking myself as well. But as a podcast host, you have to get really, really good at listening. And I was bad when I first started. And I've now done hundreds of episodes. But the process of cutting people off and shortening their conversation is just, it's not a nice thing to listen to as an audience member, in my view. So you have to learn to bite your tongue, allow someone the space to explain what they're thinking and what they got out of the scenario that they're talking you through. And so what comes to mind to me now is, what is this? Well, it's about storytelling and it's about people. And me doing or continuing to do more primary research. Now, the ultimate lens is something I will talk you through, but the face value is, this is an investment podcast. And investing is a way of life. It is a lens on the world that I had to adopt. And I was very bad at initially, but I now have some extraordinarily good proof that I've figured out a way of doing things that I believe people will benefit massively from. And largely that's because of Bitcoin. And so we will dive into what Bitcoin is and what I know about it and how I came across it, etc., over the course of this episode. But episode 0, this is a point in time for me, Jake, that will anchor this podcast over time. So I can cycle back and like, what was I thinking back then? And why did I do this thing? Let's try and answer the why. And for that, I have to give you lots of context. So bear with me. Another thing I learned from previous podcasts is, an audience member, I met a guy once who listened to every single episode of Bitcoin with Jake. And I was blown away. 80 episodes that I created from 2022 to 2023. Shout out to that man. And it was an incredible piece of feedback that people really valued what I was making. And I didn't even realize. But the point is, they must have heard me tell the same stories so many times over those 80 episodes. And it's because certain things people say resonate with you. You go, oh, well, actually, now you say that, this thing happened to me. Well, I'm hoping that this episode 0 is going to be a resource to come back to. Certainly, any new audience member, I will steer them to this episode. So, who is Jake and what brought him to this point? It's like, well, okay, I grew up in England. I'm now 36. I live in Australia. I'm married to an Aussie, Lauren. Shout out to Loz. And I have 3 kids, Ruby and Cleo and Alfie. And so I'm now a dad. And the journey to this point has been very varied, but I have to take us to a sad moment in my life, which is now over 16 years ago. But my father, he died, David, on January the 1st, 2009. Shout out to Dad. And for anyone that has experienced grief, the only thing I've learned is that time is the greatest healer. And you miss them, of course you do, but the pain is not as strong as each year goes by. Anyway, my father, he was a wealthy guy. He was the managing director of our family company, Hall & Woodhouse, which is a beer and pub company in the south of the UK. And he was running that, and we had a beautiful property in North Dorset. Anyway, long story short, he died. Suddenly, out of the blue, bang, 48 years old, heart attack. And basically, my life changed, completely changed. I thought that I would more than likely work in that business. And I thought that I would live in that house. I was the eldest son, and as it transpired in his will, that property passed to me. Without going into too many details of this period of my life, it transpired basically we couldn't afford to keep the property as it was, and we could have stayed there if we'd wanted by selling bits and pieces of it. But I just didn't want to incarcerate my mum in my dad's tomb, and it was very obvious to me that our future as a family, with my brother and sister, Tati and Rex, shout out to them as well, shout out to Mum, that our future lay elsewhere. So, okay, we need to move. And if we're going to move, what does that mean? So we went through this process of selling the house. And basically what that meant is I inherited money as a young man. So I was 20 when dad died. Within 2 years, we'd sold the property. I received some money then. I received another tranche of money 2-3 years later when I was 25, and I'm now 36. And so what the Jake Woodhouse podcast is going to be is, first of all, a multi-decade thing. I really truly believe that I have a passion for talking to people, listening, learning, and sharing stories in much the same way that man has always done. A podcast is essentially a modern format of a fire. And you sit around the campfire and you share stories, whether that's health or wealth related wisdom that is passed down from generation to generation. And this is a fireside on steroids, essentially. The amount of people that can potentially listen to this at essentially free, right? It's incredible what modern technology and software is doing to enable us to learn. I became an investor. And so that investment journey has had some ups and downs. Oh my God, like absolutely. Initially, I essentially hired a wealth manager. So this is a type of business where you give them your money, highly regulated in London. They charge 1% for the discretionary advisor role, in that they invest for you. And you'll have a remit of high risk, medium risk, low risk. And they have a number of different tools at their fingertips, be that funds, be that funds of funds, be that equities, be that bonds, different types of real estate. Basically anything in the public markets is fair game. And you might even find that they have invested into private markets as well. Long story short, I went with a company way back in my early 20s. And as I got the second tranche of money, I also made a real estate investment. This is when I was 25. So I essentially went 50-50. I went 50% with the wealth management business and 50% into physical real estate. Now, without, I don't want to get too caught up in all the details here because it'll come up in conversations. But over a decade now, I have been investing in different things. And that's just taught me so much about what an investment is, what you're looking for in investment, and the different kind of characteristics like liquidity, like risk, that aren't altogether that obvious. And it's only through experience you sort of go, oh shit, now I understand why that's so important. For me, real estate has proved to be a problem. I had my biggest loss as an investor was across 2 apartments that I owned in London. I basically leveraged, the market went against me, and the improvements I created on the property weren't seen as valuable by the market when I went to sell. And I got caught up in a situation where one of the properties had some defects to it that I could do nothing about, and no one would finance the building. Ouch. I got 50% of my money back out of the equity position that I'd put in after 8 years of holding this thing. Now, public markets in a wealth manager is slightly different, but the difficulty there is, once a year you'd receive this document that was a summary of the assets you owned. I didn't know what any of this stuff was. Like, okay, you've got gilts in there, and then you've got these different index funds or index trackers, and then you've got different currencies. It's extraordinarily complex, or at least it appears to be on the outset. It's like, well, did I make money? Did I not? That's all I really want to know. And then there's different types of lens. I went through a phase of impact investing, which is essentially a modern form of negative screening. So a religious group 100 years ago or so created something called a negative screen. So they had these funds that they wanted to invest to save value over time. They didn't want to put them into pharmaceuticals or into weapons manufacturing, for example. That has re-evolved now into something called positive screening, where they're looking at like the United Nations Sustainable Development Goals and trying to figure out which companies are most closely aligned to those by 2050. All this experience was very, very helpful in that it helped me understand what I was looking for, which is something called store of value. And that was taught to me by Bitcoin. So Bitcoin was something I bought initially in 2015, very small allocation of my net wealth. And that grew in value into 2016. I took my now wife Loz on a trip to Japan. 2017 came along and I sold a whole load more Bitcoins because I was worried about the hard fork. We also traveled that year and ended up in Cuba. And I logged into my Coinbase account and it got frozen because Cuba is a country that's under US sanctions. And so I had to kind of communicate with Coinbase to get it unlocked when I got back to the UK and stuff. But long story short, I took a Bitcoin position. I took some profits. 2018 crash comes along and I just held. And then 2020 I watched a YouTube video that changed my life, frankly. Shout out to Michael Saylor for the work he has done to be very public about how he's building and managing his business. And he did an interview with Raoul Pal in, I think, October of 2020, and it's called Bitcoin Infiltrates Corporate America. I've got a link somewhere. If anyone wants it, get in touch. But here was a guy who was essentially a rocket scientist, having been through MIT, started his own business as a software engineer in his 20s, the longest stock-listed, founder-led business in the States at over 20 years at the helm of his own business. And he just bought 300 or 400 million US dollars worth of Bitcoin instead of owning US dollars as a treasury reserve asset. And during my investing journey, I didn't touch on this, but I did some angel investing. So I was looking at startups. What kind of technology do we need in the future? Who is the right team to actually create that? And placing bets on high risk equity at early stage. And there was so many good lessons in there, but the people I really loved investing alongside in the syndicate that I joined were ex-entrepreneurs. So I learned that actually, when it comes to investing, you can borrow someone else's decisions and use them yourself. And, like in school, don't copy someone's essay. Well, it's fair game. You can see someone's portfolio allocation. You go, why have they done that? And that's why I love the phrase, ask a man what he owns, not what he thinks. And that you'll find as a listener, if you follow this podcast for a long time, that'll be a core theme. It's like trying to get into the weeds, like, why do you own what you own? And how does that actually make sense in a Bitcoin world? Because Bitcoin, as you will learn, is completely and utterly tearing the face off the traditional investment scene. Anyway, there's Michael talking about reallocating into treasury reserve asset. And I'm like, fuck, that's incredible. How's he done that? He's got a team of lawyers, highly regulated, NASDAQ listed business or something. How does that work? And that was the moment that it really caught my attention in a serious way. So Dad died 2009. It was now 2020. Over a decade has gone by that I've been trying to figure out, okay, well, I've got this pot of money. What do I do with it? And funnily enough, it was one thing that Saylor said in that interview that was, how do I know that my company 100 years from now has the best opportunity of survival? I'm going to buy Bitcoin was his solution. And I'm like, whoa, that's how I've been trying to think about this inheritance I've received. And no one had ever looked at it like that. It was always very, very short term. This year we returned X%, or this year things didn't go quite so well, so we actually, made a minus. Or by the time we take into account the OPEX of running these apartments as a small business, you didn't really turn a profit this year. It was always like this year or this quarter, super short term. It's like, no, this is the point. This is family wealth. It's mine for now. But actually, I'm a steward of capital. And this will here come up as a theme that I want to really explore over the course of the podcast series. And you think, okay, so this guy's thinking 100 years in advance. Well, that's what I need to do, or am doing. But maybe this is something to this Bitcoin thing I hadn't understood. And at the same time, I'm going, okay, well, hang on. Also, I paid a few $100s per coin, and they're now in thousands. I didn't have to mend a shower. I didn't have to deal with a grumpy tenant. I didn't have to trust someone to invest my stuff for me. I just had to put this in self-custody and just hold on to it. Well, hang on a second. This is the best investment I've ever made. And, to use a poker reference, this is something I picked up in a book called Angel by Jason Calacanis. Again, I'm essentially a self-taught investor. Anyone listening can learn this. I just had a problem to solve. The problem was, how do you keep your money? And Calacanis had a book called How to Turn 100 Grand into 100 Million. I'm like, well, that's a great question. Let's try and figure that out. But he uses a reference to poker all the time. You think about this card game. Okay, well, it's basically all about probability. And I'm looking at the assets that I owned at the time, and I'm looking at this clearly breakout performance of Bitcoin with also next to no management required. It's like, and now a stock listed company's just bought it. This is a big deal. Go. And so today is the 14th of January, 2025, as I record this. And I would have said, so that video was the Q3 of 2020. So we're talking about just over 4 years ago. And what's happened since then is this extraordinary reallocation process. And so to echo my own question, ask a man what he owns, not what he thinks. Well, as of today, my net assets, circa 80%, are sitting in Bitcoin. And so I've sold apartments, I've sold houses, I've sold public market equity positions, I've sold private market equity positions to accumulate Bitcoin. Well, why? Well, past performance is not indicative of future performance. That's very, very, very important thing to learn. Okay, well, what kind of market size are we talking about here? Well, total global wealth, 900 trillion. How big's Bitcoin today? Maybe 1 trillion, 2 trillion, like tiny. So this total addressable market's massive. And hang on, so what is Bitcoin? And the answer to that is, well, Bitcoin's just money. And then you go, okay, well, what is money? And here, shout out to Robert Breedlove, who started the show, What is Money? That's been very helpful for me on this journey. He came on my previous podcast, Bitcoin with Jake, which you can dig up the episode for if you like. This is an extraordinarily complex question with a lot of different answers. And essentially 3-4 years worth of work has gone into trying to get some kind of grasp of that. But it's interesting because, and again, I've used this kind of trope before, but I'm highly coached in how to make money, in that, I'm from a entrepreneurial family with a 240 plus year old business to show for it. Like, multiple generations have figured out how to make this and survive. And I'm part of that story in many ways. But my life's taken a different direction. I'm now over in Australia and not actively involved in the company. If anything, selling some shares, because I'm like, hang on, Bitcoin's the thing. If you don't own Bitcoin, you have to justify the other thing you own extremely well. And if you can't do it, well, then why do you own it? And so again, you're forced to ask this new question, which is, why do I own what I own? Anyway, this rabbit hole of what is money is an extraordinary one. It takes you to Austrian economics. So Vienna, late 1800s, a guy called Carl Menger has wrote a book called The Origins of Money. And he realized that people have actually been studying this thing for a long time. And I talked about being highly coached in how to make money. Well, I ended up doing a business degree, a BA in management from Leeds University in the UK, and then going to be a shipbroker. And just as long as I can remember, it was always business, 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 business. Any artistic instinct, put it to the side, how do you make money out of that? Any musical instinct, put it to the side, how do you make money out of that? I'm going to go and do business as much as I can. I'm going to figure out how to make as much money as I can. But in that entire process, I never asked, well, what is money? So let's just say I'm 32, roughly, in 2020. In my entire adult life, I'd never asked that question. And that's someone who spent thousands of hours in and around the how do we make money question. And so I implore you, if you haven't yet asked this question, what is money? Start doing it. And the fun part is that I have experienced a radical improvement in my life as a result of asking that question. And that's what this podcast series is really going to be all about, helping other people understand. So first of all, there's a distinct difference between investing and saving. And in what I now know, a fiat currency debt-based system, no one saves. You cannot save. Inflation is killing you every single year. Now, it's faster in some places than others. But where I was in the UK and I've suddenly got this pot of money, it's like, well, what do I do with it? I knew that if I just left it in the bank, in 10 years' time, I wouldn't have been able to buy more stuff. I could buy less stuff. So you're forced to invest. And that's the only way of retaining what I now know is one of the key words, purchasing power. And so in any investment discussion, what you really want to look at is, what's my purchasing power after making this investment? And in fact, what's the performance of everything you own needs to be looked at in purchasing power terms, not in dollar terms, or not in pound terms, or not in euro terms, or not in yen or RMB, or whatever currency you want to use that modern governments will implore you to actually use. But it's an inflationary currency that's losing value over time in real terms. And it's highly confusing, extremely nefarious, and well, I guess it's become an absolute passion of mine, which is essentially a financial literacy question. We don't even understand value. We don't understand how to price it. We don't understand the price we're looking at. It's actually wrong. And it's all because the measuring stick of value that we were given, the fiat monetary system, is actually incorrect. And that has a huge cascading problem throughout society. And I now see things like wealth inequality being driven due to that. Basically, anything that comes out of central bank funded academia or media is only propping up the existing in favor of the status quo. And so, well, actually, is this making people's lives better? And I've fundamentally come to the conclusion it's not. And Bitcoin helps pull the wool over the eyes, or pull the wool off the eyes, whatever the description is, to see reality for what it actually is. So investing and saving are not the same thing. Bitcoin is money. Money has three properties: store of value, medium of exchange, unit of account. And Bitcoin is extremely good at store of value. And what that really means is you're not taking risk. You just store your value over time for a rainy day. And in the Austrian School of Economics, they have a phrase called sound money. And sound money, or hard money, is exactly what Bitcoin is. And it's essentially a new place that you could potentially allocate within an investment portfolio. So let's say you start on day one. I've got this pot of money. What am I going to do? Well, you've got hundreds and hundreds of different options of stuff you can do, right? You sit in the bank in cash and earn some interest. You buy some real estate. You buy an equity of the public markets. You go and buy a startup equity. You go and buy a classic car. You go and buy some euros. There's infinite different options. But the question is, what do you want? I wanted to just have something that I knew would store value into the future. So what Bitcoin does, much better than gold, is it stores value over time, but also can move value across space. So like actually trading with gold is quite hard. And that's where gold failed. But because Bitcoin is digital, and you can send a fraction of a Bitcoin anywhere in the world at the click of a button, which again, when I use the startup investment lens that I picked up through the years, looking for like radical improvements in products is kind of where you want to be if you're taking bets, shall we say. So anyway, to make an important definition difference, saving and investing are not the same thing. Saving on a fiat standard is impossible, and that's why people use things like gold or equally the stock market or real estate as savings vehicles. But in Bitcoin's actually money. It's a hard money, and you can save using Bitcoin. And so this is completely tearing up the investment world as we knew it before, because Bitcoin, as you will know, either you've heard of it before or you even might own some, the performance of this asset has been second to pretty much none for the last decade plus. It's extraordinary how it has grown in value over time. And so if you've owned Bitcoin in your portfolio, you've done very, very well in purchasing power terms. In fact, there's a kind of financial engineering term called a Sharpe ratio, which basically says any portfolio you possibly currently have, you put a percent of Bitcoin in there, and the risk-adjusted returns over time of Bitcoin in the portfolio is one of the best things you can possibly do. And so, okay, why aren't people doing it? Well, here's the fun bit. The people that created this fiat system that we were born into, I was born into, it's highly regulated. And in some ways, they've regulated themselves out of the opportunity that Bitcoin is. Now, as of today, in the last 12 months, we've seen these ETFs come into the market. So BlackRock's Bitcoin ETF is the most successful ETF ever launched, ever. And in year one, the Bitcoin ETFs have outpaced the entire amount of value that's owned in any of the gold ETFs. It's unbelievable, the demand for this product that has been shown to be there. But what I was able to do in 2020, 21, 22, 23 is sell assets to buy Bitcoin and reallocate into this thing, and essentially what we call front run Wall Street. Unbelievable opportunity for retail investors who are sitting at home trying to figure out what to do with their money and with their investment portfolios. So I feel very grateful for that. And it's lucky. It's genuinely lucky. Like the research I've done, people tend to have between 4 to 5 really, really important moments in their lives that help them understand what Bitcoin is. So now, in my case, obviously my father died. It's like, shit, I've got to figure out how to look after money. How do I know that someone 100 years from now is going to still have some money to help them in life that are my kids or their kids' kids? And then equally, it was like, okay, well, I was in the startup space and I was looking into renewable energy and trying to figure out, well, actually, hang on, if you've got all this flexible load that's coming onto the grid, how do you handle it? And the answer is they can't. And then Bitcoin mining is this extraordinary thing that can come in, which is basically the process by which Bitcoin's blockchain is policed and maintained. It's essentially a decentralized network of power generation points and then data centers. And they have something called an ASIC, which is a Bitcoin specific hardware that is constantly doing computation to help validate transactions. I don't want to get too technical, but it's like, hang on. So Bitcoin mining solves the flexible load problem on national grids. Holy shit, that's massive. And there's a number of other things that will come up if you were to listen to this whole series. So to really ram this home, Bitcoin is money. Money, if sound, completes three objectives: store of value, medium of exchange, and unit of account. And prior to Bitcoin, gold was essentially the only option you had to make an allocation in your portfolio to a sound asset or a sound money that was a store of value, that had a store of value function. And Bitcoin changes that. And so that's actually why sometimes you'll hear people say, well, Bitcoin's not actually an investment, it's money. And so you have to think of money as actually something different to an equity, something different to real estate, something different to debt. Again, these are all things I didn't know before, and I've had to figure out over time. And you suddenly start to realize, oh, wow. So there's different types of investment, there's different types of money. And this is a whole big one as well, as the history of money. How do you figure that out? Well, how have we gone from a barter system where you had the double coincidence of wants, and I've got my apples and you've got your oranges, but I only want one, you want six. It doesn't work unless you're in very, very small economies. Money solves the problem of the double coincidence of wants. So it's a free market innovation that humans have trialed and errored different types of money over thousands of years, and gold was the best one. And you start digging into this more. So, well, there's actually a certain set of properties that make it good money. Things like being durable or being fungible. There's a very specific set of characteristics that make it good money. Grain is not durable, for example. So if you give me a load of grain and it sits in my back pocket for a couple of weeks, well, it's going to start germinating. It's absolutely useless. I touched on gold earlier. Gold's actually not very divisible. So you've got to chop it up into coins, and then you ended up with this whole situation where the coin can be clipped, and there's tons of really obvious historical stories about people basically stealing from others by chopping off bits of coin. And incidentally, that's where the name sound money comes from, because you could drop a gold coin and you could tell if it was actually, fully gold. But again, I went back to that idea of being fungible. How do you know this is a gold coin? Well, gold, you have to have certain tests, and you've got to get all this paperwork, say this is real gold. Bitcoin blockchain, you can hop online, you can see exactly how much each wallet actually owns, and it's verifiable essentially. So that's another big innovation that Bitcoin represents. Where's this all going? Well, I want to get to a point where it's like, okay, so I had a problem to solve. Okay, how do I look after this inheritance in a meaningful way, in a proactive way, and in a way that really it excels? It's like, come on, let's fucking make this happen. Let's really do something important with this, so that the next generations get what's theirs. And that's a lot of what drives me. It's like, okay, let's figure this out. And Bitcoin solves that problem. So could you argue, therefore, that Bitcoin solves the wealth problem? What do you mean? Someone who's grown up in a family where I've been taught to think about business forever. What if you don't have to think about business any longer? Because you know that your wealth is going to be stored safely and securely into the future. Oh, so what if an equity is no longer fit for purpose in terms of something that you want the next generation to inherit? What if a house or a piece of real estate is no longer fit for purpose when it comes to transferring value from generation to the next? Pretty radical questions. And in my view, it's very obvious. Bitcoin is an absolute winner. How easy is it to split your Bitcoin into 3 piles to give to your 3 kids? Pretty easy, 3 different wallets. How easy is it to split an estate up? Very hard. How easy is it to split a company up? Very hard. How easy is it to transfer the knowledge and skills to keep a company going from generation to generation? Extraordinarily hard. The failure rate of businesses, very, very high. So with that in mind, I've come to this point where I now think about capital in a certain way, and it's something I want to explore in this podcast, where I'm going to be talking to people about predominantly 3 types of capital: financial capital, humanistic capital, and intellectual capital. Again, this is an understanding that I've reached only after many years of trial and error, and I think of it now as a useful kind of lens on the world. And so financial capital, fairly obvious, right? It's your financial investments. So your Bitcoin, your gold, your real estate, your income from your salary, whatever the case might be. Humanistic is, you can think of maybe more as social capital. So your friendships, your marriage, your family, Here, something really rings true for me about like why start a podcast. It's like, well, I believe, and this is a lesson I got from Mark Moss, shout out to him who coached me for a little bit. The phrase, it's not what you know, it's who you know, is now obsolete. It's who knows you. And the fun part there, and to really chime on like why I'm doing this, it's like, okay, I believe that the most sustainable content creation process is one in which you do it for yourself. And it's about what you find interesting. And it's about what you find valuable. And people can pick up, I call it the, like Goldilocks, right? It's like digital breadcrumbs. Like people can pick that up. And if they like your content, they'll come with you. If they don't, they drop off. And that's totally and utterly fine. But if you don't find it fascinating, then it's never going to last as a project. And, I got sidetracked into a few startups over the last couple of years. Shout out to the guys that I work with there. I wasn't ready to really take the bull by the horns and do this myself. So I've now set up a company. I will operate this podcast as a business. I have a team. Shout out to Michael and to Pat, who are helping me build this from the ground up. We're not looking at monetization at all in year one. We just want to go out there and create unbelievably high quality content. The plan is to have 3 episodes a week, right? So 3 high quality conversations, 1 hour each, circa 150 done after year one. I'll also get involved in creating some short form content. We'll create clips off those episodes. And so I want this podcast to be a resource for people to understand more about money, to improve financial literacy, and to maybe improve their own lives from a financial perspective. So like I mentioned earlier, it's totally okay to copy other investors. The question is, who are you going to copy? And how do you copy them? Can you get the right piece of information at the right time? What are you going to buy? When are you going to buy? When are you going to sell? And you can answer all these questions. I've got sidetracked. I was talking about the 3 types of capital. So you've got your financial capital, your humanistic capital, and your intellectual capital. So to really chime on that humanistic side of things, like this podcast for me is just as much about going out and making new friends as it is about me learning and looking to find people that I really respect, people that have done hard things, people that are looking to save wealth over time, and really connect with that and understand like people's stories. Going back to that idea of the fireside from before, really, really cool. And so then on the intellectual side of things, am I managing my capital efficiently across those 3 buckets? Because if you spend your whole time focused on financial, well, guess what? You underinvest in the other 2, and they can then suffer. How many divorced or unhappy or alcoholic billionaires do you know? I actually don't know many, but that's because I don't know many billionaires or any for that matter. But the point is that there's plenty of people out there that mismanage this. And this is something I'm now learning, and I'm getting much more into the, let's say, spiritual side of things. What is energy? And how do you move energy? And what is an idea? And shout out to Jason Parks, who's mentoring me at the moment and will come on the show in the first 10 episodes. He's the person that actually brought to the table for me the idea of financial, humanistic, and intellectual. Because prior to that, I was using a model of financial, social, and skill. And they don't quite actually capture it, those 3 words. It's financial, humanistic, and intellectual make more sense. And so to quote a kind of Noster note that I made recently, Bitcoin with Jake, if you looked at the financial returns initially, was a break-even project at best in which I didn't pay myself for my time. But actually what it was an 80-episode deep research into Bitcoin. What is it? Who's buying it? Why is it interesting? Speaking to people all over the world. And I managed to make a reallocation of capital, of financial capital specifically, that's now 5x more valuable in dollar terms. That's fucking awesome, right? I've had money managers, professionally regulated, 1% a year type characters, like, you can't beat inflation. So, well, what are you doing then? You're sacked, should be the conversation. But it's not, because people are too scared. They don't know how to take responsibility for their own wealth. So they're dependent on these people. And then you've lost leverage, essentially. And that's what Bitcoin is. It's the great equalizer. So you can take responsibility for your money back into your own hands, look after it yourself, and you don't need anyone else. It's true accountability. It's true responsibility. And the benefits of that are confidence, time, better future. And that's what will come through in this podcast series, I hope. Just to tie a little bow in that, then, you've got different forms of capital. And so money sits within financial capital, but then within financial capital, you've got investing and saving. And so there's basically a whole framework that I now use for thinking about different decisions. I wanted to talk through a little bit about time, and essentially Bitcoin's bought me back my time. And I used to be of the opinion that I was going to have to work every single minute of every single day as hard as I could to make as many millions as I possibly could to try and get ahead. And now I'm of the much stronger opinion that Bitcoin has bought me back my time. And with my time, I then have to make an allocation. I have to figure out, what do I want to do with my time? Well, I want to spend a lot more time with my kids than I might have otherwise done. And I want to invest into myself and my wife and my marriage. And just generally our lifestyle, my health, like 100%. I do not want to be dead when I'm 48 years old, like my poor father. Bless his cotton socks. Miss you, Dad, every day. But there's an opportunity here to do things differently, and we will. And that's really cool. So, long story short, I started this rant, this monologue, this episode 0 off with, okay, who am I? What's this show going to be all about? And, why should you listen? And I hope after running through this, I'm going to be able to not repeat myself to guests and not have the audience listen to the same stories on repeat of, Jake's talking about that thing again. I've hopefully been able to discuss some of the detailed points as to what brought me here, and a bittersweet scenario, essentially, like managing an inheritance. My father died young. It's like, that sucks. But this is going to be something positive that comes out of that. Now, exactly where is it going to take me? I don't know. And that's the fun thing about making this an episode 0. I'm going to be able to cycle back to be like, that's what I was talking about at the time. That's why I started it. And so I'm just going to pull up a couple of notes here and make sure I've covered everything I wanted to, because I just wanted to just rip for a bit and rant about why I'm doing this. But yeah, some things here that are cool to mention. I'm very happy to be proven wrong. And so this is about exploring new ideas, exploring why something works, why something doesn't work. Why did you do that? What did you learn? What was hard? What was easy? And with that is like keeping an open mind. Just because you were taught a certain way doesn't mean that way is right. And nowhere is this more clear when it comes to things like Keynesian economics. Central bank manages money supply, helps with interest rates, can therefore deal with inflation. It's really good. It makes the economy grow. That was the 101 business coaching that I got through business school. It's like, well, is that actually true? And guess what? You start looking into the incentive behind that. It's like, I think there's plenty of data, so that's not, totally right. Another thing to mention is, obviously I'm looking to learn from others. But what Bitcoin with Jake did is, I mentioned it helped me reallocate my own capital into Bitcoin, and it's now looking like an extraordinarily good decision. But that doesn't mean I can't do a podcast that helps me make more decisions. It's like, okay, well, if Bitcoin's the hurdle rate, owning Bitcoin is the base case or risk-free return, as anyone that has studied value investing, that's the kind of lens you're looking at it from. Well, I've basically got to beat 66% every year compound annual growth rate of Bitcoin. If you can't find an investment that has the potential to do that, then why are you doing it? And I don't think there's many people in the world that are actually thinking like this. In fact, a very, very, very small number of people have reallocated into Bitcoin in a meaningful way. So in some ways, this can be an extraordinary thing to look back on this day, be like, whoa, that actually happened. How either far ahead or maybe I'm not as far ahead as I think. Time will tell, and we'll find out. I've done some personal development work as well, and you'll meet some of the coaches that I've had through the podcast. One of the things, Dr. Jin Ong, shout out to Jin, she helped my wife and I work on some stuff. And in particular, it was like transparency on finances in the family. And so every week I now create a statement of assets, and I share that with Loz, and I show her basically what's the value of everything we own. And I track that like very, very closely. Are you an investor or not, Jake? Well, I am. And this is my financial capital in extraordinary detail. And every single week, I'm essentially marking to market our net wealth. And last year, it went up 66%. Fucking awesome. Like, that's a really unbelievable return. I never expected to be getting returns like that. But I made a lot of horror show decisions in the past. As I mentioned, I lost 50% plus on a real estate deal. I mean, you remember your big loss the most. There's no doubt about that. Anyway, a lot about this is following intuition. What does my gut say? It's like, I have a real calling for this. It's like, no, Jake, cut everything else out. Stop listening to other people's ideas. Stop getting distracted by their agendas and being dragged in different directions. Sit down and just take a breath. What do you want to do? And this is what I want to do. And it's going to be fun. It's going to be really fun. I'm going to meet some incredible people. I'm going to learn so much stuff. And I'm going to take whoever wants to tune in on that journey with me. So, I have a message. I think that's hopefully coming through. I have results. And I've got a real vision for where this could go. So with that, this is the conclusion to episode 0. I look forward to hearing from you if there's any questions, and you can reach out to me. The website we're going to run this from initially is jakewoodhouse.io, and I'm going to be present on most of the popular social platforms, and in particular have a real focus on Nostr, which is a technology I'm really keen on, a decentralized communications protocol that's going to work in symbiosis alongside the Bitcoin blockchain, Lightning, and potentially eCash as well. So that's probably a bit high level for some of the people that hopefully are tuning into this. But anyway, there we are. Let's learn together. Thank you.